meeting of the Audit and Finance Committee. All those present.
Here, John Perkins.
Dan Hobart's here. Also, Karen DeLucci is not present, the chair of this committee, so I'll be acting as chair in her absence. Also present are Brian Kidney, Zach Walker, and Sheila Saxton taking our minutes. Looks like we've got some folks from out of town, but we'll get to them shortly. Okay, we need to approve the minutes from July 23rd, 2021. Mr. Perkins?
Councilman Hobart, I'll recommend approval of the minutes as presented.
I will second that. Any discussion? No. Minutes are approved. Okay, Mr. Luce, you are with us via internet video conferencing. How about the monthly Munis update, sir?
Absolutely. So beginning with the accomplishments, I will say that I think it was been a little bit slow in the last month or so. We had a lot of vacations. We had a key person ill for a couple of weeks. However, we still managed to get some things done, and I think we're on track for the most part. The fixed assets, going through the accomplishments, the fixed assets, we're still waiting on final acceptance of the report so we can plug the data into Munis. We're just waiting on that to make sure everybody's happy with what's in the report, and then the physical act of getting it into Munis is more mechanical than anything else. We completed the Munis software upgrade successfully. That's completely done. So that's a big win to get that off our plate. Timekeeping and scheduling. So this is a heavy lift. So we've developed a schedule to implement ExecuTime. We had struggled a bit with getting a resource from Tyler. We finally engaged them and got a person who really understands that product, and we're looking at a go live of February 1st, which is about a month later than we wanted, but it was based on getting the staffing from Tyler to help us. That's where we wound up landing. So I think that's fairly solid. We're going to meet with that person on the 14th of September and talk about rolling out the project and getting their input as to how exactly we're going to do that. One of the things I wanted to bring up that I think is it's kind of a big deal is we're going to implement a new timekeeping solution. We're going to mechanically have the way to do this. However, there's going to have to be some city internal policy discussions on how people actually are recording their time, because right now I think in talking to Pam, there's like 15 to 20 different ways people are doing it throughout the city. So we're going to need some support on that from a business policy perspective. So
Mr. Luce, let me stop you right there real quick. When does city staff need to have those policy decisions made by to keep our February 1 date?
We haven't discussed that yet with Tyler, but I would suspect we need to have all that pretty locked in by November, maybe the beginning of December at the latest.
Very good. Thank you, Mr. Chair.
So recruiting and onboarding. Oh, sorry.
1 second, Councilmember Perkins has a question.
Absolutely.
With those changes, that also get into our work agreements? Would we have to alter or discuss that with our union representatives?
It could be. I'm hoping not. Brian, can I defer to you on that?
Yeah, absolutely. One of the things we're looking at, and Ron had mentioned, is we're waiting for Tyler to submit to us a comprehensive list of here's the business decisions that need to be made in order to set that up. We're waiting on that. However, Ron, myself, we've been through quite a bit of these, so we kind of have an idea of how that's going to come down. Our plan is to make the business decisions that will impact citywide pretty soon, and we'll take the work agreements into contact. So we won't make a decision that would conflict with the work agreement. Then we're going to start kind of small concept, if you will. So, for instance, my department's going to be the first department that we convert fully to this. I believe Animal Services next. They have a lot of animals doing this. So we're going to slowly implement with smaller departments, work out, make sure we flesh out some of those big issues that might come up. And then hopefully then by November, we have that overall citywide looking at. But quite honestly, the police and fire, I mean, they're just different. It's a completely different operation from the other departments. So there might be a citywide, but then there's police and then there's fire. So they're going to be, it's going to be a long process. But we are working, it's a continuing process. We continue to move along.
Thank you.
Yeah.
Thank you, Councilmember. Mr. Luke, please continue.
Okay, very good. So let's see, the recruiting and onboarding project, I think we by and large got most of that done. We're waiting right now. There's going to be a new HR generalist, I believe, coming on next month, if that's correct. So we're going to have to train them in. The transparency portal, we haven't done anything this period. However, we are scheduled to have it installed in October. And at that point, when the software is installed, basically we're going to have to decide what data we want to expose to the public. And so we're going to probably expose a little bit at a time just to make sure it doesn't confuse the heck out of anybody. So that's the plan. Utility billing integration, that's between Munis and the utility billing solution, Advanced Utilities, AUS. That's going to be a little bit of a lighter lift. Right now, there's like a manual process, I think once a week or every few days. So we're going to try to automate that. We're going to have to work with the utility billing staff and in Munis and figure out what's really worth it. We're going to wind up doing some kind of an integration, but I don't think that it's not going to be a huge lift. So we're still working on that. The CityWorks integration. We've been having discussion about, and I know Cindy's been working on this with Brian, but the FERC reporting and what we need to provide, what kind of information we need to provide from finance for FERC reporting, because right now we've been doing that through timekeeping, and that's going to change. And so we need to figure out exactly what's needed and then work that into not only the timekeeping, but with the CityWorks integration, figure out the data flowing between Munis and CityWorks. So we're gonna talk to some more of the CityWorks actual stakeholders and figure out what we want to accomplish with that. So we're kind of scoping that out still. So anyways, I think that's good. We've got quite a few completed projects. The fire and pay's done. We've engaged Tyler Professional Services. The HR gap analysis done. Position control. Complex payroll calculations. We've established the steering committee for Munis ongoing, and then the Munis upgrade. And the risks are kind of the same they've always been. The IT security issues. We still struggle sometimes with getting skilled Tyler staff, and I see that with other clients as well. So you're not alone there. We've got 3 or 4 other Tyler clients that are in the same boat. Finding the availability of city staff to work on the project, although that's been pretty good. People have been pretty responsive. And then I'm going to add one. It's not on there. We talked about that whole thing we talked about with the ability to affect change in business policy, and that's what we just talked about. That I think is a big deal. We're going to have to stay focused on that because we don't want consternation with people, but we kind of have to move the city forward. And so we're going to try to hit a happy medium there. That's what we got.
An update, Mr. Luce. I do have a couple questions.
Mm-hmm.
Did you say that payroll is integrated or done? That module's done?
Well, I believe we were having problems with the payroll calculations, and my understanding is those are completely. We've gotten rid of all of that, all those issues. They were not calculating correctly. Is that correct, Cindy or Pam? I believe so.
Yes, that would be correct.
Wonderful.
Yeah.
And does that include fire?
Yes.
How about that? Well, good job, guys. That's very good. And I noticed one other item. This rebuilding the chart of accounts, I know there's multiple software systems that range in date from different times going back. Is that, it's not going to be automated, I'm guessing, at some point, and we'll just have to manually do data entry? Is that that's the issue, isn't it? Or is it?
I think you're going to have to redesign the chart of accounts. It's probably been, I should defer to Cindy on this. It's been the same for quite some time, and now is the opportunity to change that to kind of streamline it. Does that sound about, yeah, Cindy?
Yes, that's correct. Yes, that's correct.
Okay. All right.
Yeah.
I don't have anything further for Mr. Lewis. Mr. Perkins?
Nothing other than keep up the good work. A lot of moving parts and a lot of different things taking place, and we're hitting the timelines that you guys outlaid previously when we first started. So keep up the good work. Thank you.
All right.
We are very thankful, Mr. Lewis. Have a good weekend, and thanks for your time.
Thank you very much. Thank you.
Absolutely.
All right. Bye-bye.
Mr. Kidney or Mr. Walker, you guys have anything to add to that? Anything that sticks out? Nope. Very good. Okay. Mr. Kidney, monthly financial presentation.
Hopefully you all received the financials ahead of time. This month we'll be reviewing the July reports. Since it's the first month of the year, always kind of looks a little wonky on the budget to actual, for instance. And in my memo, the cover memo, I kind of talked about that a little bit. We don't receive property taxes until November, so you won't see any revenue in that line item for July, August, and September, October. So you'll have that line item looking pretty poor up until that time. Sales tax, which is the next major revenue. I have a little graph in there. It's a little difficult to see, but we decided to overlay the current year and the 3 previous years, just to give you an idea of how revenue flows on a monthly basis. The red dot you see for July is where we came in this month. You can see it's an increase over the last several years.
Oh, wow.
We won't know for sure how we're trending until we get a month or two. As you can see, August is our big sales tax receipt month, and so you really won't. We won't really know how things are going until August and then September, October. So initially, the first month looks pretty good, and so that's a positive thing. On the other major revenue that a lot of us are tracking, again, if you go down the cover sheet, is the use tax. Again, July is a good. It's coming out a little bit better than this time last year in July. If you see the bar graph, we have the 3 years. Back to back. Of course, the first time we collected was February of 2020, so we only have last year data for July through January. But you can see so far this year we are tracking up higher than what we had in the past. Now, those 2 revenues go into, for the time being, into animal services use tax and then into the police use tax, and not until we hit the top, or the 750,000 for animal services and the 3 million for police use, does it then waterfall into those other funds. So those general fire sales, you won't see any money in there until we hit those waterfall limits. Transit guest taxes, obviously watch quite a bit. That's on the next page of the overview sheet. You'll see on that, the green line you see there is 20 through 21. That is obviously COVID. People were not traveling, people weren't using the hotels. However, through March and June, you start seeing that increase coming back up to what it tracked in 2018, 2019, which is kind of our base year, last time of normalcy. And then if you look on July, that little yellow dot that you see on there is July of 2021, and so it's positive that matches with 2 of the last 3 years.
I'll say that's a good starting point.
That's an excellent starting point. But it does, if you look at the green line, it does trend with that. So you think that the green line is showing the year before, and then it does trend back up. So cautiously optimistic that our budget projections are lower than they were in 2018-19. However, we're feeling comfortable that we'll get there. That's major revenues. Talk about fund balance. That is something that this committee's been very interested in, and so I do have a summary. The reserve balance per policy. No big surprises here. It's the same look as in the past. General fund is still under its policy of 16% of operating expenditures. However, it's 9%. In the past, it's been 6%, 7%. This is actually a positive thing, starting the fiscal year out with a little bit higher fund balance than we have in the past. So we watch that pretty close. We'll keep this report up to date. The other ones are, you see the capital projects. They do have some pretty high fund balances. And again, the page after this one shows the CIP, where you'll see we're using pay-as-you-go type funding to pay for capital. We have no debt issue for new debt in any of these special sales tax funds. So that's why you'll see those fund balances, and as we start going forward, those will come down. And then finally, the 3 utility funds, and of course we've talked about this. Power and Light is $26 or $27 million below the fund balance policy that was adopted last year, and that's again something that we'll have to look at as our model of the next 5 years. What happens with that? Because that is something that, especially before we issue debt again, that we explain to the rating agencies, either our fund balance that we set was too high, staff feels that the fund balance we set was good, or how are we going to bring back that fund balance level before we issue any new additional debt. So that's something, again, that we want to keep track of very closely.
If you don't mind me interrupting, Mr. Kidney, while we're on that topic, as you're aware, the RFP is going out for IPL for new generation. And will you be able, as we get closer to that point, I'd love to have a presentation here. I'm sure we'll have a study session at some point for the larger council. At some point when that comes back, or closer to the time that RFP is coming back, will you be able to, is that a good time for you to come and discuss what it looks like, what the debt would look like, what the structure would look like, what the expenses would be? Does that make sense?
Sure. Obviously, we would want the council to have the tools in front of them before they vote on spending a whole bunch of money. It's how we're going to pay for it and pay it off. And so, yeah, that's a natural fit to come back with. Well, here's the cost. It goes hand in glove with, well, here's how we would recommend, or why it pays for itself, how we're going to pay off the debt financing on that. So yeah, that would, Jim and I will work pretty closely.
We'll work
together
hard on that. I would love to be able to see if we're able to do it a little more, a tiny bit deeper analysis on that, so that we could actually see what the ROI might be. Certainly debt doesn't matter if you've got an income producing asset. It pays itself off plus helps you out. Do you know what I'm saying? Would that ever be a part of your calculation, or are you able to do that?
I'm sorry, the calculation of
return on investment for any for the new generation.
Sure.
It takes a little bit more on the business side.
Mm-hmm. That's not specifically the debt service calculation, because debt service is a calculation into that ROI type of analysis, obviously, because you're paying the debt service, so you have to include that cost of the asset. However, we do have our financial advisors are well versed in that type of analysis. Our IPL, I know they do that type of analysis before they would go out and do any kind of purchase of any major, whether or not it was investing in dogwood or investing in IATAN. There's a cost benefit they would do before they would do that. Again, I would imagine the council, before they make that decision, that they want to see the cost benefit analysis. So
no, 100% absolutely right. I know that definitely goes beyond budgeting or debt service, or how how we pay for it going forward. I just want to make sure that what we do as a council, as a city, makes sense financially, so that hopefully at some point we can bite into our existing debt.
I will make.
See what I'm saying?
Absolutely, I will make recommendations to the city manager on good fiscal. The rest is up to this council, obviously.
I understand that, and I appreciate. Is there anything that's out of whack to you in these numbers? The fund balance or the revenues? I mean, you went over the revenues. Looks like we're oddly on track or slightly better in some cases, which is great. I do have a question for the city manager. Mr. City Manager, do you know when the statewide use tax that we'll get a broader based benefit from that?
Yes, that's going to be phased in over the next 2 years. Part of the legislation that was adopted by the General Assembly this year was to phase out the cable franchise fee that's assessed on cable bills and phase in the use tax. So that will occur by 2023 as that cable franchise fee is phased out.
Will we collect any revenues under that newer part of the use tax this fiscal year? Not at all.
No, not unless companies would, voluntarily begin implementing it, but no, nothing substantial.
Gotcha. Okay. That's all I needed. Thank you. Mr. Perkins?
Nothing.
Okay, very good. Mr. Kidney, thank you very much. Let's move on to the your presentation on the city investment portfolio.
Not a lot to add to what you just see, that we are currently at $133 million in assets that are invested. 113 million of it is in our core operating fund, which is basically built up of our reserves and the money that we don't need every 30 to 60 days. We have a short-term operating fund that we operate at that $20 million. That's our good cash that we have in the bank that can be accessed at any time. That obviously does interest rate. We received $112,000 in earnings this month. Net was at $1.1 million, which is actually tracking a little bit higher than what we had expected, even though what we're expecting is not very high. You can see at the very, very bottom, our yield is basically 1.28%, which is going to start impacting our financial or interest income earnings. We are starting to see where the longer term investments that we had invested 3 years ago are starting to mature. They were high interest rate securities. Now we're reinvesting them in the shorter term. So we do see our yield at these current interest rates probably going to start seeing them continue to go down. Our big goal is to always stay within our benchmark. We're close. We're at 33 basis points this last year versus our benchmark at 35 basis points. So all in all, 35%. They're lower than I've ever seen, but yeah, it could be worse, I guess. So
that's a reflection of your economy, though, right?
Oh, absolutely.
The market, the value of the dollar, inflation.
This is pure market. That's why we do it against a benchmark. Benchmark is a national benchmark of these type of investments.
Yeah.
So everyone's experiencing the same thing.
Right. Absolutely. Mr. Perkins, no? I don't have any questions on that one either. Let's move on to new business, upcoming debt issuance presentation.
I don't have a big I don't have anything prepared presentation-wise. I just wanted to give the committee a heads up that we are looking at refunding some sewer bonds, and I think I've expressed this to you in the past. I just wanted to give the committee a heads up that In September, we'll be coming to the City Council for authorization to refund the 2012 B sewer bonds, and also do an advanced tax refunding of the 2013 Cs. And just real quick, ironically, we're talking about, well, we're not getting great interest rate on the income side, but yet, that works both ways. So
Right.
now we're gonna issue new debt at a much lower interest rate and get some savings. So the 2012 Bs currently have an average outstanding interest rate of 4.3%. We think we can refund that at 1.7%. That's going to result in $8.8 million in interest savings. So
That's awesome.
and one of the reasons, so it's not just that the new debt's going to have lower interest rate. Through that structure, I've asked them to take off 5 years of the debt. So we're taking some of our savings, and instead of having savings each fiscal year, we're going to keep the debt service payments the same, but cut off 5 years.
Yep.
So that way that keeps us more flexible at the end. And also, obviously, we pay off principal quicker, and so instead of having a 20-year outstanding debt, it's going to be a 15-year debt, and that's going to help us with that $8.8 million.
That's fantastic.
At the same time, I also had them take a look at the 2013 debt. They're not currently refundable right now.
Okay.
They're not going to be currently refunded or available for refunding for 2 more years. And so what we can do, however, is do an advanced refunding. And it's the IRS says it's a taxable event where we go ahead and we issue taxable debt. We set it over in a trustee. They make the debt service payments, and then it pays off the old debt. But we do have a penalty with that tax cost. We did the analysis, risk analysis.
Yep.
And the interest rate doesn't have to increase much to wipe out any kind of savings that we would have if we just do it now.
We don't know the rates on that yet.
Well, the current rates on those are 5%, 5.14%. And even at rate is going to be only 2.2%. So again, you've got the basis points. That's going to result, hopefully, our projections are $0.3 million in interest income savings. And I'm doing the same thing with those. I'm not lowering our debt service over the next several years and taking the debt off the back. So it's going to be, instead of a 21-year term, debt we paid off over 17 years. So what we're doing, again, is because we do have good cash balances in the sewer fund, or decent cash balance in the sewer fund, we're going to use those to basically pay that debt down further, to free up and have more flexibility down in 5 or 6 years. Legislation comes in, major needs to be replaced, and we have more flexibility if we do have to issue debt. So that's kind of the business case behind why I'm taking that long-term debt off. With that, we did go to Standard & Poor's to get these bonds rated. They did our A+ rating, which is a really good rating for these, for any. It's an excellent rating for us. So
Good job.
there you go.
That's spectacular. And that's the stuff that's not interesting to anybody because it's a 15-year deal. But I think this is the kind of financial moves we need to be making. We have to be thinking about the future payoffs and the amount of debt we carry. So I think it's brilliant. One quick question on the advance refunding. Do they finance the payment we have to make to the IRS so that we don't have cash out of pocket? How's that work?
No, the IRS, it's a designation of the debt.
Okay.
So whether it's a debt is non-taxable or tax exempt or tax bond, that is up to whoever purchased the bonds.
Yeah.
So if you buy a tax exempt debt, you don't pay taxes on the interest earned. Same way with taxable. The difference is
gotcha.
If you own those bonds, then you will pay taxes, and that's why the interest rate they charge a little bit.
Obviously.
Tax rate.
I got you. Okay.
And Brian, this is just
radar. You'll give us a more of an in-depth review once we get.
So on the September,
okay.
there will be the a resolution, an ordinance asking to issue that debt, and we'll have a better market idea, and then you'll see the official statement, everything. If you recall the Cracker Nut Creek, we presented the full packet. That's what September 20th.
Okay. Sounds good. Before we, unless anybody else has any other items they'd like to discuss, Mr. Kidney, Mr. Walker, Mr. Perkins?
I do have an item for next month.
We are. Go ahead.
Travel reports. Can we get?
Yeah, absolutely. At any time you can go onto our website and see the travel expenses from the previous month. It will show who traveled, where they went, why they went there. So that is always kept up to date. Although, like you said, there's several months because we didn't have the travel. Yeah, I'm starting to see the travel.
Is that part of the transparency stuff in Munis, or is that something?
That's part of the transparency that the city manager asked me to do when I came on board, to make everything as transparent as possible, so that that's part of that process.
That's spectacular. I would imagine if you ever leave Independence that you'll still be saying, you can go check that on our website, as we routinely don't do. So appreciate the report for next time, Mr. Kidney. Okay, when should we set our next meeting? And then we're going to be done. We typically do, were we doing the fourth Thursday? Fourth Friday, I'm sorry. That would be the 24th of September. You good on that day? 2:30? Mr. Kidney, Mr. Walker, any problems? Okay, and it doesn't look like at this point, if somebody needs to add something to the agenda, just let us know, but otherwise, probably be a lot of the same stuff. So, with that,
I'll make a motion to adjourn.
second, we're done. We're adjourned. Thank you all.